Let's answer some questions that I've been asked recently, including what's in my actual portfolio? Do I still think renting is a good idea? And do I regret moving? And how do you stay calm when the market goes crazy or falls? What do you do then? So let's get comfortable, grab a tea, and we'll talk about it. So by far the question I get asked the most is what companies are in my portfolio or how is it structured? Now I've gone back and forth on this quite a lot of times when I'm trying to decide how I want to present this information. I've debated about what I should talk about, what I should not, what would be helpful. It mainly comes down to two main factors. One, of course, being privacy issues, and not because I'm trying to gatekeep everything. I know some people are very open about what they invest in, and I'm quite happy if it relates to the video to talk about a single company or an ETF that I've invested in. But the second reason I'm a little hesitant is because I just don't think it'll be that helpful. A lot of the companies that I hold currently right now, I've held for a very long time. Let's look at an example. So the largest company in my portfolio right now is Wesfarmers. I've held Wesfarmers for, I don't know, over 10 years, probably closer to 15 years. When I purchased it, it was around the $20 mark and it's now around the $80 mark. The dividend yield at the time was around 5%. And obviously because I bought it so low, my dividend yield that I get from the money that I invested back then is really high. But if you were to look at that dividend yield today, it might be 2 or 3%, I think, at the moment. So you're not going to get the same returns I am, simply based on the fact that I've just held it longer, and dividends tend to grow and accumulate over time, as does the growth, especially with that company. Another example is Coles, which I got when they split from Wesfarmers. I got a big chunk of Coles shares, and to me, it's kind of like free money because I didn't actually buy this company and I still get paid for it. Even though if you went and looked at the dividend yield today, it's only, I think it's around 3%. And sure, I could sell Coles and go and buy something else with a higher dividend yield. But the fact that I didn't pay anything for it, I got it in a split, just makes me feel like, great, just keep paying me dividends, I don't mind. So whenever I make a new video now, it's more what I would buy today if I was buying, not what I would buy 10, 15 years ago, what I would buy today going forward. So that's how I feel like I'm giving better value. I'm not selling some $300 course on my channel. I'm just trying to give good information. My current portfolio, I have 10 companies and 2 ETFs. I did have a lot more, but I'm slowly narrowing down the number of companies and ETFs that I hold just because I find I just want to hold the best companies that are giving me the best returns, and I'm not as concerned about having as many companies as possible in my portfolio. I just want the best ones. The 2 ETFs I hold are VAP and VHY. I will probably eventually get rid of VAP. I have a love-hate relationship with it. And so VHY will probably be the only ETF I hold. But I do, as I've mentioned many times, prefer holding single stocks than ETFs, mostly just because I seem to get a better return. And if that's different for you, that's great. But I just seem to get a better return from single stocks than I do from ETFs. And the companies I hold are no big secret, really. They're the banks, the mining companies, the retail companies, the big companies in Australia. I don't hold one magical company that's like responsible for making the bulk of my increase or portfolio. The companies I hold are very boring, very stable companies. And it's just been consistency and time that's grown them. So you probably already know the companies I hold. I've mentioned a few of them before. None of them are going to be a surprise for you. All of them are top companies within Australia that pay good dividends. And there isn't that many of them. So just showing my portfolio to you now. Beginners, if they just copied it, wouldn't get the same results. So I don't think it would be that helpful. More advanced investors, they're not going to copy me anyway. They just might think it's interesting, or they might be curious about that, but it's not going to change their investing style. So when I make videos about companies that I would buy if I was buying right now, and I've made plenty of these in the past, it's simply based on what I think is good going forward and not necessarily what's in my portfolio right now. Okay, so how do you stay calm during market crashes and fluctuations? Let's talk about that next. So when I started out investing, I thought if only I could get the perfect magical formula, I'm going to make all of this money. If I could get the right return on equity or the perfect debt to equity ratio, I was going to find the companies that are going to make me a fortune. I really wanted to crack that code. And I see people doing that with charting as well. If they get the perfect moving average cross. And while this can be fun, it's mostly just a way for us to try and control what we think is going to happen in the market. but investors are people, and people can be unpredictable. So it's not always a guarantee that you're going to find the perfect financial formula or the perfect chart pattern. Fear and anxiety is what derails most investors before they've had a chance to make any real money in the market. We know that the market goes up and down all of the time, but we know over the long term, it goes up. We also know that we can't predict everything that happens. Things are going to be out of our control. And that's what's scary, the fact that we can't control everything that might happen. There's going to be pandemics, there's going to be CEO scandals, there's going to be changes in technology or changes in economic conditions or presidents who manipulate the market. And this is scary, especially if it's your own money. So this is going to take a little bit of logical thinking. And I know money and investing isn't always logical. We want what we want and we want to make money and we don't want to see the value of our portfolio go down. So a lot of times it just comes down to the amount of time you spend investing and you start to understand the market fluctuations and the ups and downs. So when those big market falls happen, you know that you have to be patient and calm. And yes, it can be scary seeing the value of your portfolio fall, but like we've seen recently, it bounces back. It goes back up eventually, sometimes fast, sometimes over a few years. I tend to look at market dips as sales, like, oh my God, ANZ is 20% off now. I can go and buy some more if I want to. And whether you think that's funny or not, it just shifts your mind's perspective on what's actually happening. Because with a lot of market falls, especially if it's the market overall, there's nothing usually wrong with these companies. They haven't stopped making profits. It's just that the market or the general economic consensus is negative, and that's why the market has fallen. And when people feel positive again, they'll start buying again and the prices will go up again. Also, this goes without saying, keep it sensible. Don't put all your money into one company. That's way too stressful. Invest in the companies that make sense to you and you feel comfortable and you can sleep at night holding. Now that might be just ETFs and that's fine. It might be single companies and that's fine. Just choose the companies that are stable and boring. And if you want to have a little play money with some other more high risk companies, then that's up to you. I personally don't, but you might like that. Investing is a personal choice. But know that as a whole, the market goes up over the long term. The renting question that gets a lot of people upset. So I moved about 2 years ago into this great apartment and I just signed a new lease, so there'll be another year here, yay! Do I regret moving? Absolutely not. I really, really love it here. It's got a pool, it's got a gym, it's so close to the city, I can walk there. I just love the lifestyle here. But yes, my rent is double now. Now this isn't the gotcha moment that a lot of people think it is. I could have continued to stay at my old place, there was no problems there. I just wanted to move somewhere nicer. So my income had increased to a point where I could afford somewhere nicer. And even though I wasn't really looking to move at the time, I absolutely love it here. My portfolio covers my income without any problems. I can still get all my bills paid. I can still go traveling. I often talk about buying a home is a lifestyle choice, but renting is also a lifestyle choice. Being able to choose where you live, being able to choose whatever you want to do with your money is such a privilege. And it doesn't matter where you choose to spend that money, whether you choose to spend it on a house, on rent, on traveling around the world. When you have money, you get to choose where you want to spend it. And that's the financial freedom that we all want. The fact that we can choose where we want to spend our money. And I think that is incredibly empowering. So I absolutely do not regret moving. I love it here. I probably wish I had have moved earlier now, because living in the city is just super fun. I can just walk to restaurants and I can look out my window and see the world go by and everything looks busy and exciting, and I really love it. So yeah. Anyway, this video is getting super long and we've only covered 3 questions. I will do another Q&A in the future. I just wanted to do a quick fun one on questions I get asked a lot. So I hope you've enjoyed this video and I'll see you in the next one. Mwah. Love you.